What is up, good people? It is market update time. If you want to know exactly what's happening with the Denver real estate market right now and where it's going probably the rest of the spring and throughout 2024, you are in the right place. We're going to go through all that, and I'm going to break it down sort of in those two different ways. So two different buckets here. What's happening right now, what it's looking like right now, because there have been some significant changes, and then where it's going in 2024 based on his data, and then also based on some predictions from Fannie Mae, which are new and go against the predictions that they've been making for a while. So for those of you who don't know, Sam Newman, Denver real estate agent. My goal is to be your go-to guy in Denver real estate. Reach out. My contact information is everywhere. I want to help you. I have people reach out all the time, and it's great. I love it. A lot of good stuff happening out there. Before we get in, elephant in the room. The plant, I know, it's dying. It's not looking great. I'm trying, guys. I water it. Maybe I've been watering it too much. I don't know what's happening, but it is a prop in this room, and I currently do not have a replacement. So the plant is looking a little sad. Maybe it needs more sun and water, right? But I recently got the suggestion from my wife, Kristen, that maybe I'm watering it too much. So I'm going to stop doing that, but it's also still going to die. So I'll be getting a new plant. But you care less about that. I'm sure you care about the plant, but you probably care more about Denver real estate. So we're going to look at data a little bit, but really I'm going to go anecdotally, because here in early February, things are already kind of off to the races. And so I'll give you that right away. Our real estate spring market is happening already, and it has shifted since the new year. Really, if you're paying attention at all, the second half of 2023 was very slow. We expected things to pick up early 2024. I'll talk about that in a little bit. And they already have, to the point of competition in offer situations. Last weekend, I was out. I was not personally offering for any buyers, but I was talking to different people, and I probably heard of 6 different situations from people I know, whether that's buyers or whether that's real estate agents, who are in competitive offer situations. 2, 3, 4 offers. One had 6 offers and went $50,000 over asking price. Kevin Root, shout out. Is this something that's going to be the norm now? No. Still no. Is it going to be 2021, 2022 all over again? No. It's probably going to be 2023 over again. If we're to look at it, that's kind of what we were predicting. That's probably what we were seeing already. It's probably a little stronger than a lot of people projected right out of the gate here. But nonetheless, interest rates have dropped. They peaked at 8% in October, and now they're in the mid to high 6s. That's a significant difference. And many think they'll be coming down even more. So just this data here that we're looking at right now, basically this is what I want you to look at. Let me get my little draw thing. I love these market updates because there's no edits. I just do it. This blue line here that I'm coloring on with a red line, that is the average daily active count. And you're seeing basically what happens is over the second half of the year. So this is 2023 right here. This is 2022. This is 2021. Those are outliers, but 2023 is more normal. You see in the spring, the fall here of 2022. In the fall, and this is when rates rose, basically inventory rose too. And then in the spring of 2023, it came down. This black line is the same thing too. And then in the fall of last year, it got a lot slower. It went up again. You're seeing two things basically repeat themselves here. So, and what can we expect? It to come down again in the spring. And if you look at this black line, this is months of supply of inventory. That's how inventory is measured in months of supply. You'll see just these last few weeks, it has come down sharply. This little bar chart here, if you can see that, come down sharply to the point where we're at 1.2. We're nearing the 1 month of inventory mark. And we'll go below that here in the spring, whether it's in a few weeks or whether that's in April, May, I don't know. But 1 month of inventory is important because 1 month means if we go below that, that means multiple offer situations are the norm. They're typical. Not always going to be a bloodbath, not going to be early 2022 again, but we're moving into a situation where it's a more competitive real estate market. Basically, here's what happened. there's all this pent-up buyer demand, and mortgage rates improved slightly. Even if mortgage rates didn't improve, we were going to have a lot more buyers out in the spring. I say the spring, it's still the winter, but after the new year is what we call the spring selling season. We were going to have a lot more buyers out regardless. That's just buyer activity. That's when it happens. New year, let's find a new house. Okay, we're through the holidays. It's time to do it. And the fact that mortgage rates came down and there's still so many buyers looking out there, even for mortgage rates to come down from high 7s to high 6s, that adds a lot of buying power. That could be the difference of $50,000 to $100,000, maybe not $100,000, maybe $50,000 more you can afford now in terms of home price, just in that interest rate change, because that's going to save you hundreds of dollars a month in your monthly payment. So basically that's it. That's what's going to happen. We're going to see a strong spring. If you're a buyer, don't be discouraged. There's a sweet spot in here somewhere. I always say go when you're going to go. It doesn't matter. You don't have to look at me to tell you when to time the market or anything. Right now, yes, it's going to be more competitive. The other thing is there's a lot more houses coming on the market. So spring is the most competitive time, but it's also going to be, you're going to have the most to choose from, even though that doesn't seem right because you're seeing inventory drops in the spring. Well, inventory, the amount of active inventory on the market drops, but that's only because homes are being bought much quicker. So inventory doesn't have the time to build up, but there's a lot more new listings that come on in the spring too. So that's that balance basically. A lot more new listings that come on, but they don't stay on very long. So you just got to be ready to move quicker. Like I said, I'm going to actually go over to my Instagram here. We'll see if we can hear this because I posted this video. Stop, Sam. I posted this video September 25th of 2023 talking about this is what's going to happen over the next 6 months. Now, it hasn't been 6 months. It's been like 4.5 since then. But this is basically what's going to happen. Let's listen to what I said, why I said it, and we'll talk about that after, okay? Okay, a quick warning about what is going to happen in the real estate market over the next 6 months. Yep. Right now, largely due to high interest rates, sellers are offering significant concessions to buyers, and a lot of the time buyers are able to get homes for under asking price. In the spring, that will not be the case. There'll be a lot more buyers out as part of seasonality, and a lot of the listings that are on the market right now are going to expire around the new year. Which is the way it works, constricting supply even more. Tell them, Sam. Now, homes are a bit on sale. That will not be the case in the spring. Notice I did not say if interest rates drop. This is going to happen regardless. If interest rates do come down over the next year or so significantly, and that may happen, it also might not happen, well, then it's going to be even more challenging. Then we are likely in the realm of multiple offers on homes and offering over asking price, appraisal gap, all that nonsense. But regardless, this is what's going to happen in the spring. Things are going to get tougher for buyers. Buyers are starting to adjust to those higher interest rates. Homes are on. All right, so that's enough for now. But basically, yeah, that's what I was saying, and that's what happened. And it's not because I'm Nostradamus here. If you're reading the data, you could see this coming. Homes were on sale last fall. There were fewer homes to choose from, but you could get these concessions. You can get it for under ask price. That is, as I said, is going to go away in the spring. Kind of has already gone away. Not everything. It depends what you're looking at too. It depends in the area, and we could drill way down on this stuff. If you have questions about specific areas, email me, text me, call me, whatever, and then we can talk about that because Lodo, for example, has like 10 months of supply right now, and other areas, Evergreen, Golden, those areas are very, very hot. And so much lower inventory, meaning. And so it's all dependent on that. But basically, the other thing too, condos, by the way, condos kind of follow a different pattern. Condos, still good opportunities right now. Side note. But again, if you're looking for a condo, you could be thinking about this market that I'm talking about right now and saying, oh, geez, it's going to be a bloodbath out there. For some of them, it will. But for a lot of them, it won't because it's a different market. Condo market moves slower. So anyway, take that for what it is. But that's what's happening in the spring. That was always going to happen, and it is what's happening right now. So it shouldn't surprise anyone. The other element to this, though, is these interest rates that have come down a little bit. Now, they're still at 6.5, probably closer to 7 for most people. That's an improvement, but it's nothing like you were getting in 2021. Fine, that's never coming back. And buyers, like this guy said, are starting to adjust to that. But basically, that's going to help buying power a little bit. And if mortgage rates drop more, that's going to make more buyers come out and make the market constrict even more. And Fannie Mae, many of you know, the GSE, they're the government-sponsored entity that buys mortgages, and basically Fannie Mae and Freddie Mac make a lot of the rules essentially about what a mortgage can do because, well, people don't have to abide by them. Mortgage companies don't have to abide by the Fannie and Freddie rules. They're called conforming guidelines. Basically, these guidelines Fannie and Freddie set. And so if you abide by these guidelines in your mortgage, then Fannie and Freddie can and will buy them. If you don't, they won't buy them. And that's a whole other conversation, why that happens and how it happens. But moral of the story is most loans are going to conform with these guidelines. Certainly not all. But Fannie Mae, so they play a big role in housing and the mortgage industry. And when they say matters, they expect mortgage rates to dip below 6% in 2024. That will boost home sales, which it will. Now, this is a departure for what they were saying before. They were not saying below 6. They were saying maybe mid 6s. I have to go back and see what exactly they were saying. They weren't saying below 6. That's going to make a big difference. Psychologically, if nothing else, if you see 5.75 versus if you see 6.1, that's a big difference. 5 feels so much closer to 4 than 6 does, at least in my opinion. And Sam, are you saying that consumers make purchasing decisions based on emotion? Yes, I am, in fact. And there's a lot of data to back that up. We make our decisions emotionally first, and then we use logic and reason to justify them after we've already made the decision. That is the beautiful, beautiful part of being a human being. So Fannie Mae is now saying, basically, since the Fed said it's going to stop cutting interest rates or stop raising interest rates and announced they projected 3 interest rate cuts in 2024, Fannie is essentially following suit and saying, yeah, because of those Fed fund rate cuts, mortgage rates are going to drop below 6%. Look at this article. It's awful. It's all text. It's very government. I'm not going to try to go through this, but I will show you a money.com article that says the same thing. Basically, what they're saying, yeah, this is under 6% would be the first time since September 2022. And Fannie Mae is predicting that mortgage rates will begin a slow, if somewhat bumpy descent from their current levels in the mid-6s. You're not going to get mid-6s. Everybody says, why are mine higher? I don't know. I don't know why what you're quoted on Google is always a little bit better than the rate you actually get. Maybe you will. It depends on a lot of things. But they say the 30-year fixed rate loan is going to average 5.8% by the end of the year. That would be a big deal. Others are expecting rates to stay above 6%. We don't know, but they are pointing out that rates have already decreased. I thought it said deceased by more than a percentage point since last October. That's true. That was big. They were like 8% then. And that just matters because it matters how much house you can afford. It's the same house, but you can pay more for a house now and pay less than in October, theoretically, because it's all about the interest, especially the first 5 years of your mortgage. Your payment is mostly interest because the banks, that's just the way it's amortized. The banks want that interest up front. If you go sell it or refi or whatever, they still want to get theirs. But over the life of a 30-year loan, you'll get, when you go to buy a house, you will get this closing disclosure, which says, here is your interest rate, here's your purchase price, here's, if you stay in the loan for 30 years, here's how much you're actually going to pay. And it is a shocking number, shockingly high. But that's the point, obviously. These percentages, they seem sort of minuscule, but they matter a whole bunch. And so, moral of the story with all this is that at least Fannie Mae, one major player in the mortgage industry, expects rates to fall below 6%. That's good because, like I said, it's going to make homes more affordable. It's bad because it's going to make more competition for buyers. Good for sellers. If you're thinking about selling a home and you want to see mortgage rates going down, even if you're not going to buy on the other end, even if you got something else worked out, you want mortgage rates to go down because the more mortgage rates drop, the more money you're going to get for your home. If you're a buyer, there's going to be you can buy a house whenever you're ready to buy a house. I know we always say, yeah, it's a good time to buy. And realtors always say it's a good time to buy. Part of that is if you want to say, hey, we need to incentivize people to buy, otherwise we don't have a job. Sure. I've never convinced anyone to do anything. I've said many times, I'm not in the business of sales. I'm in the business of educating and helping people who already want to do something. So if you already want to buy a house, it's going to depend on your particular situation. I will say there tends to be a sweet spot in about late May through late June to early July. So late May to early July, where there's still enough inventory on the market to give you some options to choose from. But the spring frenzy has died down. So you're not going to get it. I mean, you're not going to get anything, for 50 grand off ask price and seller concessions like you would have in the fall. You might later this fall, we'll see what interest rates do. If they go lower, then it's going to be more competitive. But in that golden period I'm talking about, late spring to early summer, there's going to be enough on the market to choose from, and the buyer competition will have waned. So if you're trying to time the market, that's when I would time the market. But you want to get your ducks in a row now. You want to get pre-approved with the lender. You want to get ready to go. If you're thinking about selling a home at any time in the next year, the time is nigh. It is high time, right? Those mean the same thing. It's time to go now and get that thing on the market by late February, early March at the latest. That's going to maximize your investment, and it's going to get you the most money. So as always, like I said, I'm here to help. I love when people reach out. It's been happening all the time. We got a lot of good things in the works, and I want to help you too. If you watch this far, I love you, and I'll see you soon.